Welcome to the SNN Network Canada virtual event. I'm your host, Robert Kraft, and on behalf of SNN Network and our lead sponsor, Small Cap Discoveries, thank you so much for joining us today. I'd like to introduce you to our next panel coming up here at our MicroCap Investing Workshop. This panel we have titled Cleantech and Greentech, and we're looking to explore themes within that. Cleantech, Greentech, understanding the trends, and having a conversation with three management teams that are actively working in the space. So taking us on that journey today is our moderator, James Sbrolla. He's a full-time private investor and board member that focuses specifically on clean tech. So with that, James, take it away.
Thanks, Robert. It's a great pleasure to be here. And I want to disclose right off the bat, I'm a shareholder in two of the three companies presenting, and maybe by the end of the week or next week, I'll be a shareholder in the third. They're obviously great companies, all three, and our sector in general in clean tech has been fantastic over the last little while, and I believe we're positioned for an incredible future. The recent conference in the UK brought a tremendous amount of exposure for our clean tech sector. Every day, front page of the paper, talk about carbon and international cooperation around cleaning up the environment and trying to make a business out of carbon. The Democrats elected in the US last year, that obviously helped our industry. And it's obviously that carbon's a big opportunity, but also we know that we're going to have blue boxes and catalytic converters and tremendous other areas that bring environmental opportunity. So we've got three terrific companies and three great CEOs to talk today. We've got Andrew White, Char Technologies. I'm an investor in Char. I'm actually also on the board. Derek Webb from Biorem. I'm an investor in Biorem and have known Derek for a long time. In fact, I was involved with Biorem before Derek was there many years ago. So terrific company and great history. And we've got Nick Blitterswyk from UGE. Relatively new company to me. I'm looking forward to learning more about Nick and hopefully be an investment opportunity for me in the future. So what we're going to do is going to have each of the three CEOs talk about their business, and then we'll do some Q&A, some questions to all three and some questions to individuals. Andrew, if you want to go first and talk about Char.
Absolutely. Thanks, James. And, it's a pleasure to be here today. And thanks for everyone who's tuning in. So Char Technologies, what we say we're about is decarbonizing for a circular economy. And what that really means and how we accomplish that is through our proprietary technology called high temperature pyrolysis. But basically all it is heating stuff up without any oxygen. So it's like a big oven. We put material in it and we convert it into other stuff. Because there's no oxygen, nothing burns, it gets converted. So the circular economy aspect is we take in very low value material, think like compost or think like waste material from a biogas plant or even wood waste or sawmill residuals or things that don't really have a great home. We process it through our system and we create two outputs. One is a gas. That gas we can convert into green hydrogen or even renewable natural gas. And I'm sure we'll talk a little bit more about that later. And the other is a carbon, a biocarbon, sometimes called biochar. We can use that to offset fossil coal emissions by swapping it out for fossil coal, or even put it in the ground where it sequesters carbon and creates carbon credits. So the circular economy piece is taking very low value material into our system. The decarbonization piece is we're creating renewable energy products at the back end.
Great, Andrew. Derek, you want to talk about Biorem? Give a 40,000 foot overview.
Great, thanks, James, and good morning to all my colleagues on the panel today. I'm pleased to be here as well. Looking at Biorem from a high level, that 50,000 foot level, we consider ourselves an environmental biotech firm. So we're applying natural microbial processes to deal with industrial air emissions. So at the end of the day, what we're really talking about is using bugs that eat the air pollution as a food source. So very simply put. The value that we provide are with the development of these custom designed microbial processes for each application. Now, why is that important? As we have increased urbanization, we have more and more people moving into our cities, you end up with residential areas being very close to critical infrastructure, whether it be solid waste, whether it be dealing with water and wastewater, or whether it be dealing with very significant industrial processes. That can be surface coatings, it can be pharmaceuticals, it can even be right down to petrochemical operations that are situated very close to people. So as citizens in the Western world and pretty well everywhere as people focus on quality of life, this is becoming a bigger and bigger issue for people. What we try to do is provide solutions that don't consume copious quantities of energy, that don't produce secondary byproducts that are as hazardous or more hazardous than the primary pollutants you're treating. And we try to do this simply by using the power of Mother Nature to do the work for us. We're able to produce very complex systems, very reliable systems that work and stand to the test of time. You know, our footprint is fairly global, with headquarters here just outside of Toronto, Ontario. We have a footprint in 23 countries, and we have manufacturing in China as well as in the US, and our sales offices in the US. So a global footprint, a global supply chain that enables us to be very flexible to deal with all these crazy market conditions that companies have been witnessing for the last year. So a small company with a large footprint, trying to harness the power of Mother Nature to do our dirty work for us. Thanks, James.
Derek. And finally, UGE, Nick Blitterswyk. Nick, the floor is yours.
Yeah, thanks so much, James. And really interesting to hear more about Andrew and Derek, your companies there as well. So of course, UGE is a solar company. Number one is that we're downstream. So we're developing projects. And if you think about the overall industry, there's the residential side of things with homes. There's the utility scale side of things. We're everything in between. So we're a mid-scale solar company focused traditionally on commercial industrial rooftops. And as we've grown, as the industry has grown, that's become a lot more of ground mount projects in this mid-scale space as well. Within our industry, one of the ways that we differentiate, it's quite a fragmented market, and we have like a full life cycle approach to what we do. So we develop our projects, we build them out, we finance and own and operate those projects. That's a bit of a pivot from where we were growing up. So at the beginning of 2020, we made that pivot to start saying, okay, we're going to start financing to hold our assets. And that was coincident with quite a uptick in growth of the company. So, beginning of last year, we had about 17 megawatts of projects we were developing. As we close out 2021, it's in excess of 145 megawatts. So it's been a really good growth period for the company. And I think part of that is this full life cycle approach, which we think makes us a lot more efficient, gives our shareholders a lot better returns, but then also for our clients, provides them a much more efficient process too, as opposed to the typical develop and sell approach that sort of is the predominant source of development within our industry. And then also our sector too has really great tailwinds right now. Whereas traditionally it was businesses either buying a system or then the rooftop PPA model became fairly common middle of last decade. What's really propelling growth for this mid-scale space is something called community solar, which in essence allows us to install a project within a utility area and then sell that energy to other energy users within that utility zone. So in the last few months, we've announced agreements with Bloomberg and T-Mobile, and really seeing a big uptick in terms of just what we can do in the size of our market based on kind of the evolution of regulations within our space. So yeah, really happy to be here, and thanks again, James.
Thanks, Nick. So just quickly, and we'll go in reverse order. Nick, you first. I don't think any of the three of you mentioned your symbol. All three companies are public. That's why we're doing this. So I think it's important. Give the symbol and just a very quick, sort of overview on where the stock's trading relative to its 52-week numbers, or whatever you think is appropriate in sort of 30 seconds. Nick,
yeah,
first.
Yeah. So in Canada, our ticker is our name. So UGE. Down in the US, it's UGEIF. Market cap, as we talked today, I think is about 60 million Canadian. We have, and share price is in the sort of 170 range. We, at the beginning of this year, share price traded over $3 briefly. And if you go back to the beginning of last year, our share price was in the, I think it was like 10 to 20 cent range. So it's been pretty good uptick for us overall over the last couple of years as the companies really started to scale up.
Great. Derek?
Thanks, James. So the ticker symbol is BRM, trading on the Toronto Stock Exchange, the venture. In terms of where we're trading today, I think this morning we're roughly around the 81 cents range. There's a lot of history on this, a lot of movement over the year, but we started off more around the 30-40 cent range at the beginning of the year and looking to end more in the 80 cents to $1 range towards the end of the year.
Perfect. Andrew?
You know, we're also venture listed. Ticker is YES, YES. You know, it doesn't rhyme with Char, but I think it's certainly a testament to our positive attitude and what we expect to be able to influence in the world as we, you know, grow and deploy our technologies here. So, you know, we're really getting into deployment of systems, of getting into some of these build own operate opportunities, which you know, I think will be reflected in the company's performance and has been.
Great. Okay, so Derek, well, this question is for all three of you, but we'll have Derek answer first. Everyone has struggled the last couple of years, and a lot of companies have struggled through the multitude of challenges, supply chain issues, COVID disruptions of the business, and so on. How have you positioned yourself in this environment, and how much of an impact has it had? Has it been good? Has it been bad? How have you differentiated, you know, so the approach at Biorem first?
Thanks, James. Yes, absolutely. You know, I've been doing this for almost 30 years now, and I've never seen such a convergence of challenges on a corporation ever in one fiscal period. The last 2 years, you know, starting off with obviously the travel bans and supply chain disruptions due to COVID quarantines in certain areas. And that has progressed further into inflation in terms of all of the key materials, whether it be fuel to move products for manufacturing, whether it be different steels and alloys for fabrication and construction, whether it be cement, even due to the cost of transportation and energy required to make the product, all the way through plastics and resins. Each of these components are integral to the delivery of one of our systems. So by factoring all of these pressures on us, you know, at the end of the day, what it does is it made our company, our team kind of rise to the challenge. You know, we've always had challenges, we've always met them and succeeded. And this year and last year have proven that we've been able to adapt to these market conditions. The way we've done that is through a variety of things. It was through forethought and planning in terms of the supply chain. As I indicated in the introduction, we have our engineering and some of our sales and some of the research and manufacturing in Canada. We also have integration and manufacturing in the US, and we have engineering and manufacturing in China. So we've got 3 countries and 3 complete different areas of the globe that can provide the assistance and the diversity that we need for supply chains. So for example, earlier on this year, when sea containers from China rose from an average of $5,000 per container to a high of 32,000, we shifted manufacturing of certain components into the US. The same thing, we were able, as ports were being shut down in the US, we were able to shift other manufacturing to other locations in Canada or use other ports and shift supplier base. And our supplier base operates out of 11 other countries, which gives us additional flexibility. So while we weren't able to manage all of the cost increases, what we were certainly able to do is manage our budgets acceptably. We were able to manage our delivery schedules in an acceptable manner for our clients. Then the next part of the puzzle was really dealing with embracing technology. You know, in the past, we've always had a fairly flexible work type of structure at Biorem to encourage the retention of high quality talent. But we were always a little apprehensive from, you know, dealing with this work from home and how that would really work out. You know, at the end of the day, people are people, you need that interaction. But we were surprised at just how well our company was able to function from a remote location. And to this day, we still remain officially closed. And as we move into 2022, we are looking at implementing a long-term hybrid work schedule because it's worked out so well for us. The next stage of this was really through the embracement of technology. And we were able to use specific types of technologies. One small example was using Google Glasses. By sending Google Glasses and appropriate support equipment to our customers, we were actually able to start up our systems remotely anywhere on the planet without physically being there in person. So this enabled us to have our eyes on the ground, to be able to react real time to troubleshooting and get our project started efficiently on time, within budget, without disrupting our clients' schedules. So through the embracement of all of these techniques, it's been a relatively positive experience over the last 2 years. Still a challenge. I think I started off with hair at the beginning of 2019, but all jokes aside, I think the team has risen to the challenge, and we're quite pleased.
Andrew, thanks, Derek. That's great. We'll go to Andrew next, and then Nick, you after Andrew.
And I probably share a number of the same sentiments that that Derek shared. I mean, the first one is, I don't know what would have happened if this was in, 2015 and not 2019, 2020, because with, Microsoft Teams or Zoom or all these technological tools, we were able to shift to the remote work. And, much like the Biorem team, we were able to shift fairly seamlessly, and people really enjoyed, being a Toronto-based company, the ability to work from home a couple days a week and not be in traffic. It helped the company, it helped our staff, so which was phenomenal. And we do some in-person stuff now, particularly engineering. It's a lot easier to just print out a drawing and all kind of sit around it with red pens and mark it up versus trying to do it digitally. But that hybrid work model is definitely something that we're also embracing, and was a lesson from it. Probably like everyone, the first few months were a little chaotic in early 2020. Projects get paused, especially in the clean tech space. A lot of our clients, they're environmental health and safety managers. And when a global pandemic hits, the E of EH&S drops off pretty quickly. But after just those few couple months, I think people started to settle in. We found ways to deliver some of our other offerings. We do have a consulting subsidiary, and kind of similar to Derek's anecdote about Google Glasses, we found doing virtual plant walkthroughs to do assessments and to help them with the environmental assessments that they needed to do was, an option, and something that we can still offer as, new waves come out, and, there's hesitation to allow people into plants and the like, where, obviously we don't want things like COVID spreading. The other one is actually an anecdote I heard yesterday, and whether this is true or not, I kind of like it, and that is the relation between what scientists say about COVID and what scientists say about global warming. And that is, scientists are right. They predict the wave, and, kind of some politicians say, well, no, it's down, it's not going to come. And then that wave happens. And whether it's true or just, correlated somehow, the people embracing that, scientists are right about climate change, and that climate models are accurate and we can trust them. And this is something we have to deal with. Like I said, whether it's just because people are spending more time at home, or because scientists now are trusted because of how they're able to predict what happened with the pandemic, I'm not sure. But that leads into, this last 12 months is probably, has been our most active in terms of developing projects, in terms of working with clients, in terms of demand for renewable natural gas skyrocketing, in terms of other environmental considerations like PFAS, polyfluorinated alkyl substances in biosolids, which is one of our market areas that this has become a huge concern. Just the environment in general, whether it's climate or, clean soil, clean air, has just, I think, exploded in the last 12 months. Not that it wasn't going, but the inflection point really happened. And what we want to correlate that to, I'm not sure, but we definitely saw it. And coming into 2022, I'm very encouraged where the industry in general is, and I'm very excited where Char is. So after those first couple months, we really got rolling here.
Great, Andrew. Go ahead, Nick.
Yeah. I think to echo some of those points, when Andrew said the first few months after the pandemic was declared were fairly chaotic, and it's actually the first thing that came to mind for me was just I think that the strength of our culture and team to be able to rally together to we didn't lay anybody off, and yet we were able to find ways to decrease costs during that leaner time. But then on the flip side, I don't know if anyone could have predicted how well the sector has done coming out of those first few months, but it's really allowed us to be at the right place at the right time as we've scaled up our organization quite substantially and seen our overall pipeline this year grow in the range of 8x. And so I think that the things we're able to do to make our company stronger through those leaner times and to scale the company thereafter have really started to pay dividends for our shareholders going forward. To touch on similar points to what Derek mentioned there, in the solar industry, if you look at, probably just about everybody here has seen like solar cost curve, for example, going down and to the right steadily over many years. And so this is the first year in a long time where solar costs have not gone down. And solar panel costs, for example, have gone up in the range of 10% this year. But we've been able to manage that, I think, in part based on, our projects typically take a couple of years from the time we start developing them to the time they're built. So that does mean that we're already procuring stuff several months out and not necessarily in a, under the gun to buy something at the most expensive time. And so we hope through that those impacts won't be too significant. And as of right now, it hasn't materially impacted any of our projects or our timelines. So that's been good. And then I think, on the flip side of that, as we go into 2022, and I know there's a lot of predictions out there right now about how supply chains normalize or otherwise for next year, but we're seeing a lot of positive signs in the solar industry. Partly it's based on, I think, the Biden administration's differing approach to trade from not just the Trump administration, but the Obama administration as well. So just as we're closing out 2021, there's been 3 really significant positive moves for the solar industry that have removed tariffs, struck down some potential tariffs, and things like that are just going to make costs lower in 2022. And that's in line with a historic increase in production within the solar industry. So, we're, as a developer, we're looking at those inputs like solar panel costs to go down as much as possible to make our projects that much more profitable. And so, we're optimistic in terms of how that works out in 2022 here.
Great, Nick. Thanks for that. So just quickly, guys, I'm going to ask individual questions. You answer as long as you like within reason. Try to keep them 1 to 3 minutes. I'm going to try to spread the time evenly. So if you give a long answer, I may give another question to the other 2 or whatever. But anyway, Derek, we'll start with you. Biorem recently completed a unique share repurchase, or actually my understanding is it's almost done. You've announced that it's in the works. Can you explain how it helps management achieve the growth objectives, and how does it benefit shareholders? Can you sort of give us a quick walkthrough on that?
Absolutely. Thanks, James. And actually, I'm pleased to say the transaction finally was concluded yesterday. So it is a done deal, and we were able to repurchase a block of approximately 60% of the shares and retire those shares, which is a pretty unique thing under the securities law. Typically you're limited to about 10% per year, but given the fact that this was a foreign owner who held this block, we were able to structure the deal in such a manner to use the capital resources that we had built up to finance those shares. Now, there's a bunch of elements of this repurchase initiative that are good for the company and also quite positive for the remaining shareholders as well. So looking at just the pure financial side, we had a large block, as I said, roughly 60%. The remaining outstanding shares were still closely held as well. So between management, employees, and friends and long-term investors, that probably represented another block of roughly 25%. So we had up to 85% of the outstanding shares simply were not moving. They were long-term investors. There was no buying and selling. So we really were stuck with this illiquid situation. So that was one of the goals that management had, is how can we improve the liquidity of this company and try to generate some value for shareholders in that manner. The other element of this is obviously if we have a certain market cap and we have a certain fund balance sheet and income statements and a history of performance, and we have 38 million outstanding shares, you end up with a certain type of market capitalization based on the number of outstanding shares. By retiring that block of shares, we still have the same fundamentals. I mean, our balance sheet has changed somewhat. I mean, the vast majority of this deal was financed through our capital reserves, but we did take out a long-term loan for about 4 million of that purchase price. So balance sheet has changed somewhat, but the fundamentals of the company remain the same. And as you can see from how the market has responded, we've doubled the share value since announcement of this transaction. So it's an accretive movement for the minority shareholders. Long term, however, this is step one in terms of a long-term growth objective. So remember, we talked about liquidity. Now we've got to start moving into the next phase of our growth, which involves organic and inorganic growth strategies. And to fund the inorganic growth strategies, we will be looking to issue more shares, get those outstanding shares back up, get a variety of shareholders involved to improve liquidity and continue on with our growth objectives. So from the financial side, this was a great move for everyone involved. The Chinese owners ended up making some profit off their investment. Our minority shareholders did. And then the final piece of the puzzle was really just removing a piece of liability. Given the geopolitical situation, given some of the trade issues we have between the West and with China, this removed a fairly large future liability from the corporation and gives us the ability to move forward and not be impacted by Buy American or other types of regulations. So all round, multifaceted win-win for both our clients and shareholders, and the Chinese that ended up making a profit off the deal as well.
Great, thanks, Derek. And that's a perfect lead in. Nick, I want to ask you, because I know the solar industry, and we all know solar exists. We all know it's come a long way, but there's always the question, is it cost competitive? And China's been a big factor on that. So I'm hoping you can talk about the international dynamic. And also, how does UGE differentiate itself amongst the solar companies? So tackle that any way you like.
Yeah, for sure. So, on the cost competitive point, I think it's, I would say that the general populace still doesn't understand just how cheap solar has become. And a couple numbers to kind of drive that home. This year and the last two, and I didn't mention it before, but a lot of our business is in the US. Solar has been about 40 to 45% of all the new energy from any type being built in the US the last 2 years. So solar is very much here, very much cost competitive, and generally speaking, just getting cheaper over time. And where's that coming from? I mean, I remember when I started the company, which is about 12 years ago, there was a common refrain at that point in time of kind of amongst the maybe climate change deniers in some cases about like why should the US and Canada invest in renewable energy when countries like China and India are not going to? Well, I mean, it's just been so blown out of the water. China right now installs about 3 times as much solar as the US does on an annual basis, and India is a very close third to the US. So we're seeing so much growth in solar around the world. To throw in another number, the prediction by the International Energy Association is that solar will be about 80% of all new energy being built by the end of this decade. And so, of course, with all that economies of scale, all of the investment into improving solar panels and other aspects of the supply chain, we've just seen this industry take off, and there's other aspects that are really starting to take off in similar ways right now, like the addition of battery storage to the mix and so on. And then in terms of UGE, in terms of how we differentiate ourselves, we've really staked our our company's future on this mid-scale space. Residential grew quite fast over the last decade. Utility scale has grown quite fast too. The mid-scale space was a bit of fits and starts. And the example I like to give is, you might think about all these malls and rooftops and everything else, but there wasn't really an alignment of why those real estate owners and so on would be installing solar until the last 2 years, when regulations have started to evolve to allow what we call community solar. And that is what, like I mentioned earlier, we can work with the REIT that owns that mall. We can install solar on that mall, and then we can sell energy to whether it's the tenants of that mall or even other businesses and off-takers throughout the same utility zone. So it's I think if you stop to think about like the 90-something% of commercial buildings not owned by their tenants, you start to understand how much that's opening up our industry. And so within that, We were the first ones to do a community solar project in New York, the first ones in Maine, and been very early in the growth of this industry, which is now the fastest growing part of the US solar industry. And the Department of Energy has an initiative to grow it by another 8x by 2025. So, focusing on that mid-scale space, focusing on, having the full life cycle approach that I talked about earlier is really how we're differentiating ourselves in this space.
Great. Andrew, we'll shift to you and Char. How about you explain to us how high temperature pyrolysis works and how it relates to decarbonizing for a circular economy? That's a mouthful of a question, I guess. But anyway.
That's fine, and we'll kind of take it piece by piece, but sort of the easiest way to explain the technology is think of a giant tube that rotates. We have an airlock on one end, so material that goes in, no air can come in, and we heat that tube from the outside. And if you remember your fire triangle, for fire to happen, you need air or oxygen, you need ignition, and you need fuel. So we don't have air or oxygen, we don't have ignition in the system. So that breaks everything apart. It doesn't burn it, it breaks it apart. So we break into solid carbon material that comes out the back end, and then we have a gas stream, we call it a syngas, that is rich in hydrogen. So we can take it into a green hydrogen, like our project in California with Hitachi Zosa and Innova, where it's probably the perfect example of the circular economy. They're taking food waste, they're making biogas with that food waste, digesting it. That biogas is making electricity. Great, it's a clean, green source of electricity. That plant is making a compost-like material that's relatively low value. And that's what goes into our system. So we're taking these low value materials and adding value to them. So that's really sort of the concept behind circular economy. The decarbonization point is whether we're making green hydrogen or renewable natural gas or biocoal, which is we can make a coal replacement out of the solid material. These are all offsetting fossil forms of energy, so be it natural gas or coal. And to kind of put the market dynamics into perspective, if we focus in on the opportunity to take things like woody biomass and woody residuals and turn that into renewable natural gas through our technology, and we just look at Canada for a second, Canadian provinces now have mandates and targets to blend a certain amount of renewable natural gas into their overall pipeline. So, in British Columbia, it's 10%, and that's growing. In Quebec, it's 10%, that's growing. And a recent analyst report predicted that for FortisBC, the gas utility in British Columbia, to meet the mandate, they would need around 40 pentajoules of renewable natural gas energy, and a pentajoule is 1 million gigajoules. So 40. In 2019, Canada produced 6 pentajoules or 6 million gigajoules. So that's BC. Based on population, you can assume Quebec is about the same in their demand, and Ontario is going to come up that demand curve as well. So there's a huge push now to get some of these renewable products into things like pipelines. And through high temperature pyrolysis, we can take some low value materials like woody biomass, wood waste, sawmill residuals, find a better use for them, and participate in this market where we're trying to offset fossil gas with renewable gas. And that's the decarbonization piece of the puzzle.
Great, perfect. So question for all three of you, and Nick, we'll have you go first this time. I'm not a Greenpeace guy. I'm a businessman. I worked on Bay Street. I don't eat granola, although there's nothing wrong with granola. I always want to be seen as a guy who looks for profit. And a lot of people don't like the question of government with respect to our industry because they don't want to invest in things that are reliant on subsidies or grants. So the question is, can you explain how the current regulatory environment helps or hinders expansions of your business? Nick, you go first.
Yeah, for sure. I mean, it has changed so much, and I think that anyone still with a bit of a sour taste in their mouth, for example, for the Ontario feed-in tariff and how rich that was when that came in 2010, needs to take another look at where things are now and see how much things have changed. And Ontario, as an example, from the early days of the feed-in tariff, where it was 80 cents per kilowatt hour feed-in tariffs in order to make the economics of solar work, Now there is no feed-in tariff at all in Ontario, and you have solar that is competitive with grid prices in the province. Keeping in mind that electricity is a lot more expensive in many places in the world, especially in the U.S. And so here down in the U.S. we provide significant savings off of that. The one incentive that has primarily supported renewable energy in the U.S. is a federal investment tax credit. This was originally put in place by President Bush close to 20 years ago, and has been renewed several times since then, including once under President Trump. The biggest thing that we're watching right now is the Build Back Better Act gets debated and potentially goes through here. Is there a long-term 10-year extension of the investment tax credit, and it would also push some incentives specifically towards areas that we work in, like low and moderate income communities and things like that. So, we're excited for that. And I should say too, just to negate any sort of preference towards our industry, this is the same type of credit that's used in oil and gas exploration and other types of industries within the US as well. So it is much more of a level playing field now than ever has been before. And I'll say lastly that 95% of our business is in the US. We've had a subsidiary doing the same type of commercial solar development in the Philippines for a number of years. That's a place where no incentives whatsoever. Solar is about half the cost of the grid. So just driving home how cheap solar has gotten.
Thanks, Nick. Andrew, we'll go to you next, and then to Derek.
Yeah, for sure. And it's because of some of the lessons learned from that Ontario FIT program, because I think politically, no one's going to do a similar type program anymore. But there's other incentives and other motivators. So, when I look at, what our key market opportunity in Canada, which is, renewable natural gas, there's not a mandated price, but there's a mandated quantity. So they're through these programs and through these targets, incentivizing supply and creating, this demand by needing to meet a certain quantity of gas into the grid. And that's certainly, beneficial for the renewable natural gas piece. When we look at the carbon outputs, our product, we've branded it Clean Fire, but it's a biocoal, which basically means it's a coal replacement, but it's made from organic material like wood or some of these other organic wastes. And when there's a Canadian federal backstop on the price of carbon, our large industrial clients, be it in the steel industry or metal smelting, they can clearly see the economic impact of not switching to, say, a biocoal and continue to burn fossil coal, because now they can't dump that CO2 in the atmosphere for free. There's going to be a price to it, like there is a price for wastewater generation and other, solid waste generation. So, I see that as positive, but again, it's there's a limit being put on, or there's a price on that piece, and it's up to market players like ourselves to find out how do we produce the most competitive product that we're going to win in that industry. So it is through regulation and incentive, but it's not the government saying here's a fixed price for a certain amount of time. We're going to incent you, but then we might pull it all away. So certainly in these environmental spaces and in the greenhouse gas emission spaces, I don't see limits opening up. I think we are all kind of going to be in agreement that there's going to be prices on carbon. How those prices are going to exist, whether it's a tax or a trading program, or compliance credits, trading programs under different names, there's going to be some economic incentive. When we look south of the border, it's similar in that on the renewable natural gas side, there's market programs, be it in California and Oregon through the low carbon fuel standard, or through these RIN programs where you can sell renewable natural gas that has a lower carbon intensity. So that is CO2 emission per unit of energy is much lower than natural gas. And based on that carbon intensity, there's an incentive price to put that into the grid. And the final piece is on the Build Back Better program. There's a lot of great tidbits in there. And for us, I mentioned this project in California where we're making green hydrogen. Part of the Build Back Better program is there's now going to be a credit for the production of green hydrogen in the United States as part of that program. So, you know, that helps. We were down there already, so it helps boost the business case, but we're not relying on that specific credit. But we'll definitely take it.
Great, Andrew. Okay, Derek, over to you.
Thanks, James. I echo a lot of the same sentiments of my colleagues here, but for any investor that's interested in the clean tech space, they have to understand that the whole clean tech space is simply driven by regulations. Subsidies and credits also help for early adoption of innovative technologies, and without them, this industry simply wouldn't exist. If you look at Canada in particular, and you look at some of Canada's best environmental companies over the years, whether it be Trojan or Xenon, their growth trajectory, the speed and the magnitude of their growth were set directly because of regulations and the enforcement of those regulations. You know, unfortunately, one of the toughest realities that I've had to come to terms with with my career in this sector is there's very few companies and managers out there that voluntarily do something good for the environment. And even if it's at a benefit to the bottom line over a certain period of time, if that period of time is larger than how that manager is being rewarded, whether it be a quarterly or annual objective, you know, a lot of time, the early adoption of these technologies takes a little longer to realize the financial benefits. So it's always been a challenge to be able to move products that are breaking the boundaries in terms of science or showing new features. And that's why regulations and the enforcement of regulations has always been an important factor for our success. Now, having said that, though, the good news is that most of our jurisdictions on the planet, whether it be in Canada, in the US, even South America and Asia, most of the jurisdictions now recognize the importance of air quality. And you're tending to see a tightening of those regulations and a tightening of the enforcement of those regulations. You know, certain areas, certainly in China, they've enacted some of the strictest VOC regulations on the planet. If you look at Ontario and Quebec, we've enacted some of the strictest quality of life legislation on the planet. So these are all very good things. When the federal government or provincial and state levels are not moving fast enough, what we've started to see a trend in the last several years is where municipalities take the legislation into their own hands, right? Federal government's moving too slow on this case. Well, as a municipality, we want to have a certain quality of life for our residents. We will put bylaws in place. And so that's something that Biorem has always kept a close eye on, and we try to work with our government partners through relevant associations, or directly working with the regulatory agencies in various states and provinces so that they have the information they need to develop sound policy based on sound science. Because in the long run, that's a benefit for not only Biorem, but for the industry as a whole. So I can't stress the importance of regulations. They drive the business in this sector.
Great. Well, guys, we've got about 1 minute each to give a quick closing comment. And you pick what you want to talk about. If you want to give one data point that you want people to remember about your business or one exciting thing that's coming in the future. Nick, we'll go to you first. And each of you, if you can keep it to about 1 minute, that'd be great.
Yeah, no, thanks. It's been really interesting to hear about hear about Char and Biorem here. So appreciate being on this panel. I think you know, for us, it's really a matter of being the fastest growing segment in the overall solar industry, which is the fastest growing segment over the overall energy industry. And so really feel like we're very well set up, and you know, all of the experience we've gained over the last 12 years has put us in a place to capture a really significant market share of this fast growing space. So look forward to many fast growing years ahead of us here. Great.
Andrew, we'll go to you next.
Perfect. Thanks, James and Nick and Derek for a great panel. You know, I think it's one of those things where we've been building the company for a while, and now we're absolutely in the right place at the right time. We look at the opportunities in renewable natural gas. When I mentioned earlier, BC needs this 40 pentajoules. The entire country of Canada made 6. That's all driven on first generation technologies. We're a second generation technology that's proven. And so the market opportunity is just massive for us in that vertical, and our ability to support both adding value to low value materials through circular economy focus, and creating products that really lead to decarbonization. I mean, I think we can all absolutely agree that CO2 and greenhouse gas reductions are going to become stricter, and we're in a fantastic spot to be able to help support clients and industries move towards those stricter CO2 emissions. So very excited for 2022 and beyond.
Great. Derek, over to you.
Thanks, James. And I'll echo Nick's comments. It's been great to hear about each of your companies. You know, there's a bright future in this space, and each of your companies are doing great things. So to end our discussion about Biorem, I've been with the company for almost 3 decades, and I tell you, there has not been a single more exciting time than where we are today. With the transaction that was just completed, we have opened up significantly the future opportunities for this company. The remaining shareholders are educated, they're diverse, and they support management in our growth objectives. And that's an important thing to have. On top of that, the fundamentals of the company have never looked better, right? We have almost $30 million in backlog. That's orders in hand, ready to be delivered over the next 12 to 18 months. We have a renewed shareholder base, and we now have the flexibility to look at both of those organic and inorganic strategies. You know, one of the things we announced at the AGM this year was that we were releasing a new product line, a full comprehensive line of modular units in the physical abatement space. To date, we have sold, this week, we sold our 300th unit out of that new product line, which is a significant move forward into that segment of the industry. So not only do we have the financial fundamentals, we've got new products, and we're looking at new geographic territories to expand our organic growth strategy. On top of that, we are well advanced in an inorganic growth strategy as well. So I put all of these factors together with a group, a team that is seasoned. You know, the average tenure at our company now is over 10 years. That means we've got a young team that are experienced and full of passion. So we've got all of the elements here, James. It's an exciting time for Biorem, and I really look forward to what's going to happen in the next 12 to 24 months. And I hope everyone that's been listening can get as excited about this company as well. It's an exciting time indeed. Thanks,
Derek. I'm excited about Biorem. I'm excited about Char. To repeat the disclosure at the beginning, I'm an investor in both companies. It was great to learn about UGE, Nick. I'll have to take a closer look, and perhaps I'll be an investor in it. And to the people listening, just in summary, I would say it's clear to me that the world has embraced clean tech investing. We used to call it the environment industry. Now we call it clean tech. Whatever the name is, I believe we're entering a golden age for taking advantage of the opportunities and making the world a better place, and at the same time as making money. So thanks to all 3 of you. Robert, we'll pass it back to you. It's been a pleasure to host you guys and to moderate.
Thank you all so much for a great panel today, and I look forward to connecting with you all post-event. Have a great rest of your year and happy holidays.
Thanks, Robert.